Hi and welcome to this live currency strength indicator tables video. My name is John. I'll be taking you through the charts this Friday, the 11th of November. Here we have our two currency strength indicator tables in front of us. We have our trend traders table and our day traders table. These are showing us the same studies but just on different time frames. You can see here some of the currencies are highlighted in green. Those that are highlighted are showing us that there is a confluence between those trading time frames. The tables auto update every 15 minutes 24/7, so wherever you are in the world you can access this website, and if you do have access to the currency strength indicator tables, you'll get an update every 15 minutes. So what are the tables showing us today? Well, it's showing us that the New Zealand is topping the charts at S1 on the trend traders. That's then followed by the Japanese yen, which is the second strongest currency, and then we have the Australian dollar, which is the third strongest currency. Following on from that, on the weaker side of the trend traders table, we have the dollar as the weakest currency, the Canadian dollar as the second weakest currency, and the pound as the third weakest currency. Going over to the day traders table, we can see that the yen is the strongest currency, followed by the Australian dollar, followed by the Swiss franc. The US dollar is also W1 on the day traders table, which is then followed by CAD at W2, followed by the New Zealand dollar at W3. So you can see Kiwi appears twice, but is not highlighted in green. That's because it's not showing a confluence, because one is on the weak side of the table, one is on the strong side of the table. In these videos, we're going to be highlighting the currencies that are in green. We're going to be looking at these in our video. So we're going to actually start off with the dollar yen, because that is a currency that has recently come into a little bit of a change in momentum with regards to the trend of that market. So let's dive into dollar yen. Why is dollar yen so interesting to us from a fundamental point of view anyway? Well, the US dollar CPI data came in yesterday a lot softer than anticipated, which has caused the dollar to fall essentially, as the potential for the Federal Reserve to hike rates by 75 basis points in the December meeting has come down quite a lot. So the expectations are now for a 50 basis points hike. So that is the Federal Reserve potentially going to slow down the pace in which they're tightening, and that's backed up now by the fall in CPI. Starting off on this monthly chart, then you can see that why we talk about the potential change of sort of the rhetoric here was because look how far dollar yen has moved over the past couple of years. You know, we've had over a 4,000, nearly 5,000 pip move to the upside here. You can see it quite clearly on the monthly chart, coming all the way from the 103s now up to the 147s. So huge move. And if you look at it, it hasn't really been met with much selling recently. Okay, we've really just continued to push to the upside into the 1998 highs, which is this 147 level. However, softer CPI, we're starting to see some bearishness come into this market. So will that continue, and could we look for potential opportunities? Well, let's go a little bit lower. Let's have a little look at the weekly time frame just to kind of give ourselves an idea of the trend of the market. And you can clearly see that price is in an upward trend. We are making higher highs here, and price, like I said, rejecting the 147 1998 February 1998 highs. We did creep above that area. You know, we rallied beyond that. We got into the 150s at one point before seeing that change, but looks to be like price is in an upward trend. Could be coming back down into previous structure highs at the moment. Could find a bit of support here for a continuation is what I would be looking at from this kind of time frame, just looking at it by eye there. So let's have a little look a bit closer, because on the daily time frame I've applied a few more levels of interest that we can take a look at that give us a little bit more detailed analysis. So first things first, this trend line forms down through here. We were expanding that out, and price breaches that trend line now showing us that the sellers are definitely in control of this market at the moment. We are approaching previous highs, like I said, so the 139 is that previous high, and you can see that price is approaching this level at the moment. So it's going to be important to see how price reacts. Do we get a reaction from here? Do we start seeing buying coming back in, or does price trade through the level? If price trades through the level, then the next point of interest for us is going to be the 135 handle, because that is such a strong level on dollar yen, and it actually originates, if I just go back here on, let's go back up to the weekly time frame, you can see the 135 spot 50 135 handle comes in, and these were the 2002 highs, so such a significant level on dollar yen. So I'd expect some kind of reaction around the 135 if price was to get through that. We also do have some slight confluence as the 200 moving average is slightly below, so if the 200 moving average could catch up potentially with the 135, if price does trade through the 139 handle, then 135 could be the support point for dollar yen. How does that help us make trading decisions now? Well, it looks to me like we're going to have to wait for a slight retracement phase. If we actually just go down into the 8-hour time frame, again, I've applied another level of interest, which was the 142 spot 25. Now, this originated from this consolidation that we had in the market before price broke out and took back off to the upside. So this consolidation here saw price trade between the 142 spot 25 and the 145 spot 50 handle. Now that level there could also act as resistance, and you can see price has actually retested it on the other side quite early on, and has continued its way down. So the way I'd be looking at this now, if I was looking for that dollar yen short potential opportunity, I'd be waiting for that pullback now. I'd want to see price give me a lower high opportunity. Where that lower high could come in could be that 142 spot 25 handle. So if price was to pull back into this area here, that would be my area of interest for a potential continuation move to the downside. Okay, so keep an eye on that. Obviously, if price trades through the 139 handle and we consolidate, that could also give us an opportunity, especially if you're a breakout trader. You could definitely look at a break below those lows there for a continuation to the downside. Bringing back in the tables then, what other markets could we potentially look at? Well, I was actually taking a quick look at Aussie CAD. Okay, so Aussie CAD featured on the charts here. Aussie, one of the stronger currencies at S3 on the trend traders. Canadian dollar W2. So if I actually head over to Aussie CAD, it's quite an interesting market at the moment in terms of where price is resting. So let's go to Aussie CAD. So you can see here Aussie CAD coming into the 0 spot 86 handle, and we've seen a rejection. Not only that, but we are at a bearish channel low. Okay, so we have two confluences there. We have the horizontal resistance and the trendline support coming through there. Sorry, horizontal support and trendline support, culminating at the 0 spot 600 handle. And it looks like we're going to start seeing price push back to the upside here. Maybe price will stay within this channel, playing out sort of the bigger picture channel, which you can see coming through into the market. So maybe we'll see something like that happen, because we've got that channel within an overall larger sort of range there. So if I go down into the weekly time frame, again, just identifying some levels of interest, you can see as I've gone down through the price, I've just looked at highlighting these types of opportunities here where price has recently found some resistance, quite like the 0 spot 94 handle. We have multiple resistance levels going on through there. Also the 0 spot 91 could have some confluence for price immediately if we were to see a rally to the upside. It's the previous swing highs on the weekly. The 200 moving average is around there as well, so that could also offer a little bit of selling before maybe we head up towards the high of the bearish channel. Go down even lower then on the daily time frame, we can see that price again, we have channels within the overall channel here, and we can see that price has recently breached through this short-term bearish channel there. Again, just giving us confluence that buyers are stepping into this market at the moment. You can see the 0.91 handle would be something I'd be interested in. Now, the way I'd be looking at this, I'm just going to dive a little bit lower. Because there's just a couple of minor support and resistance levels to be aware of. So we have this resistance up here at the 0.89 handle. That to me is an immediate resistance level to keep our eyes on, because price has found support here, resistance, resistance. So price coming into this level is highly likely. So I'd expect maybe a relief to come from this area, maybe some profit taken at that point. Obviously, if price trades through it again, I'd be looking for retests on the other side. But until that happens, that could be an area for price to target. You can see here as well, when we breach the trend line, we breached this level here at 0.8750. So that to me is another area of interest. So if I wanted to be a buyer of Aussie CAD, personally, I'd be looking for price to come back down towards this level of support. If it found support, I'll be looking to trade up to the 0.89 handle. If that is unlikely and price does trade through the 0.89 and we get a consolidation above that level, I'll be looking for longs at this type of area. Okay, so there's a couple of ideas to keep your eyes on there for Aussie CAD, but I liked Aussie CAD because it has room to go. If we look at it from sort of a weekly time frame and we take a bigger picture outlook of the bearish channel here, I think if price is going to start heading towards the 0.91 handle, you've got 230 pips there. To the top of the bearish channel, you've got 360 pips. So good room to breathe there for a move up to the upside. I'm going to leave it there. Thank you for watching this video. If you are watching this at a later date and you are interested in becoming a member and seeing how you can bring the currency strength indicator tables into your trading toolbox, then please head over to charlesclifton.co.uk. Here we run a trial period for £1 and you can get access to the tables. Thanks for watching, and I'll speak to you soon.